As the coronavirus known as COVID-19 keeps spreading, economic concerns continue to mount. Markets have seen a major impact in recent days, and investors are worried about what the long-term effects might be. For more, let's bring in John Klotz. He's a financial advisor with Investment Planning Council, and he joins us from Toronto. Good to have you on to talk about this. Hello.
Thanks, Beverly. Thanks for having me on.
Okay, so disastrous kind of Monday. Tuesday wasn't much better. We're a little bit better today. So tell me about the broader picture of the coronavirus and or other factors that are having an impact on the markets.
Yeah, it's a great question. And, it's scary, right? I mean, the health implications of this, people are obviously upset and they don't really understand it. But, basically the market's been volatile going into this year. And there's lots of things that are scary to begin with, like the U.S. election, China trade wars, Mideast issues, and that sort of stuff. And perhaps it was a trigger, the coronavirus. So like you saw on Monday, it dropped, over 1,000 points, and on Tuesday, 800 points. But it's what are the implications of this? And for the short term, you're going to see volatility, and it's going to, I think, basically affect supply chains.
And it's interesting, John, because, we've been going through the coronavirus story for weeks. Obviously, it's spreading, faster now outside of China. But the market kind of shrugged it off for a little while. So are you saying that in terms of what changed, there were all kinds of things bubbling there anyway?
Yeah, I think so. So, these are obviously, my opinions, but it's not the first time that there's been these types of viruses historically. So you've seen SARS and things like that. And it does impact the market, but I think it's a short-term impact. That's been the historic thing from my general observations. But might have been a number of factors. We've been in a bull market for 9 years, and these things do get overheated, and events can trigger market corrections.
And so for those that would say, we've heard a few anyway say, well, you know what, it's been overvalued for 2 years. We're due for a really good correction. Everybody would be listening to the word correction, thinking, okay, does that mean imminent recession? Is that all, overblowing the whole issue?
So again, I don't know, but I would say this: what's going to happen is, if you look at sort of the long-term implications, so short-term, you're going to see these, this volatility, and I've been sort of telling my clients that for quite a while. 2019 is going to 2020 is going to be a volatile year. So something's happened. This is, it's this virus that seems to have some unknowns to it. It's definitely affecting the market, but I think it's short term. Once the supply chains are going to be interrupted by this, and so that will create short term volatility. But I think long term, once things stabilize, you'll probably see a bounce back. I'm not telling people you have to redo your portfolio. In fact, this is not the time to do it. Is during a market correction. But yeah, I think long term there isn't going to be a major impact from this.
So take a breath and then relax, more or less?
That's a great question. So you're asking me a financial planning question. You should have a portfolio that is properly diversified with both upside potential and downside protection. And these are things that are developed by financial advisors like myself to weather this sort of stuff. And yes, not to panic.
Okay, great to hear that advice. Thanks so much, John Klotz. Appreciate you coming on the show.
That's my pleasure. Thank you so much.